The CPI numbers just came out, and it has Donald Trump coming after Jerome Powell publicly. But will Jerome Powell sit on his hands? And is there going to be something that actually says inflation is under wraps? Do you guys believe these CPI numbers? I don't. That's for one. As I always say, the biggest lie is CPI. But let's go over the numbers, and then we'll go over to see the surprise reaction from Donald Trump and Jerome Powell following these numbers coming out. Of course, we see the CPI numbers coming out at 2.4%, which is below all of the expectations at 2.5%. But core inflation also was below their expectations. So every single analyst missed these projections by 0.1, which has sent the market skyrocketing in flight here, which is kind of unique because we haven't hit that 2% target, but for some reason, inflation is under wraps, and the odds of the Fed cutting rates are now down to 0%. We're going to get into all of that as well here in a second. But let's go into what Market Watch broke down, because I really do enjoy Market Watch and their analysis on this, because they're saying inflation is still not showing tariff-related spike, because essentially everybody and their mother was anticipating some sort of inflationary spike due to tariffs, right? We've been talking about it ad nauseum on this channel, just about how much everybody is like, oh, inflation this, inflation that, tariffs are down, tariffs are this. But in reality, the inflation is still not showing due to tariffs, right? Because tariffs don't necessarily cause inflation. And the CPI rises a scant 0.1% in May. So consumer prices showed little sign of tariff-related increases for the third month in a row, defying expectations of a rise of inflation from trade wars. The absence of rising inflation is unlikely to spur the Federal Reserve to cut interest rates and all of that. But the interesting part, I like how Brian here said CPI beats on overall and core in May. The money supply has been flat since 2022. That's why inflation data has been subdued. Tariffs don't cause inflation. Excess money printer does. As you guys can see, this is the M2 money supply. I love to show this, but this is right here, the flat money, where we essentially made it all, hike those interest rates to flatten out that money curve. Now with that, here is the CPI actual table here. I like to show table A to kind of go over it. The overall number is 2.4, food 2.9, which is interesting, but the biggest drop came from energy. All of these energy prices are just overall down, right? So the drill baby drill seems to be working, allegedly, but the food and all this, right? Look at this. 15.3% on utility piped gas services, it looks like, which is very interesting, right? But everything else relatively stable. It's just the energy prices saw a huge dump on gasoline, on energy commodities, but the utility piped gas service is what we see absolutely skyrocketing in flight over to all of this. But how is Donnie T reacting to this? He's saying CPI just out, great numbers. Fed should lower 1 full point. That's would be the largest drop literally of all time. So of course, art of the deal, Donald Trump loves to come in hot and say these things, but they would pay much less on interest and debt coming due. So important. So I think that's very interesting that Donald Trump is actually, saying this, that they want to pay much less on interest on the debt coming due, because we all know that that is coming due very quickly. And I believe it's like 600 or 700 billion dollars worth of debt is just coming due. And the US is going to have to essentially refinance here. But there's the muted May. I like this how they put this. Muted May inflation defies tariff fears. But it's interesting. The major appliances are up 4%. Peanut butter. We might, how we always were looking at the egg prices. Are we going to look at the peanut butter price index soon? I mean, it's got a little ring to it, but bananas, car, trucks, toys. But there's been some notable decline. Eggs, of course, gasoline, airline fares. All these things have been going down while others have been rapidly increasing. But in reality, the U.S. consumer prices rise moderately, and tariffs are seen fanning inflation. It was 0.1, food prices rise just 0.3, and eggs are a bit cheaper, and CPI advances 2.4% year over year, still not getting down to that 2%. So we're still off from these inflation numbers, but the interesting thing is how Donald Trump is reacting to all of it, right? And the way the CME group is reacting to it. There's literally 0% chance, according to them, that the Fed will cut interest rates. But the unique aspect of what we're seeing is that there's now a 0.2% chance that the Fed will raise interest rates. So it's all good. I mean, it's ridiculous. It's ridiculous what we're seeing. Like, how could you possibly raise interest rates at this point in time? Well, it would be because inflation actually isn't under wraps. So I mean, I think it's an interesting little proposition that we're seeing here, that we're seeing the Fed potentially raising interest rates on all of this, right? And the stock market is going accordingly, right? The bonds rallied after a muted inflation report. Dow prairies. Trump lauds deal restoring trade truce with China. Like, all of these different factors are making for the stock market and everything else. And I'll get into the S&P 500, how it reacted today. But the movers were pretty muted on Wednesday. The swings were much larger in the market for government bonds and oil. Government bonds staged a big rally after last month's monthly report on consumer prices, dragging on the 10-year yield and treasury notes with a 4.413 in recent trading to 4.472. So as I, stress on this channel, we're not looking at a Tesla stock. We're not looking at, these big giant movers. When you see a 0.5% move in bond yields, that's something to really keep a very close eye on. And the annual inflation rate, right? Like, we hopefully don't see any big swings in that. Another thing I love to track on this channel, and if you guys love seeing it, please hit that subscribe button for me, is the US dollar index, because the Dixie is essentially the strength of the US dollar relative to the other fiat currencies out there. When I started tracking this 2 months ago or so, it was right around here, 98. Then we saw it got all the way up to 101 pre-cutting the tariffs, doing the taco trade, where Trump always chickens out is how they describe it. Now we're falling back down because of where the inflation rates have gone, right? I mean, the tariffs go away. There's this big giant pause on everything, and we see the Dixie fall back down to where it was pre-tariffs. So it's interesting because everybody's like, oh, hey, look at this. It should be fine. It should be fine. But in reality, the market's reacting in a sense where we're seeing just a 0.27 down day, right? So it's not like the market really did love seeing this low CPI number. I mean, the CPI gets reported in the morning. You see an initial spike up, but, nothing too crazy, because it beat expectations, but it wasn't to the point where people were, clamoring at the bit. They're saying inflation is back on the rise, but at a slower pace than expected. Still, the market is not expecting the Fed to cut rates. Higher for longer policy appears to be here to stay. And, like I said, the CME group is saying the same exact thing. They're looking at it and saying, hey, there's a 0.2% chance that they will actually raise interest rates. So there's a 0% chance of easing, no change, and 2% chance or 0.2% chance of them hiking, which is, drastic, right? So these deficits, all of these different things, right? In reality, what causes inflation is that massive amounts of money printing that we saw a few years ago. Now we're feeling the after effects of that. And as long as the Fed doesn't lower interest rates and let the floodgates out, inflation should be fine. Where I think things can get a little hairy here pretty soon is that the Fed is looking at this and saying, hey, you know what? Trump is yelling at me to cut a full point, not 25 basis points, not 50 basis points. He's looking to cut a full percentage point so he could refinance that loan, get more debt out, do all these different kinds of things. The reality is that massive amount of QE, especially in a short period of time, would send inflation skyrocketing in flight, and we would just see it just take off. So I don't necessarily agree with Donald Trump on this aspect of cutting interest rates and thinking that it would make everything all peaches and daisies. The reality is this needs to be under wraps drastically before we really get to that point of actually cutting interest rates. So, Powell and Trump have been at odds with each other for quite some time. And it seems like they're here and they're still at odds at each other. At least they're at odds with each other publicly. Who knows about behind closed doors? I mean, if Trump wanted to fire him, he's already kind of threatened and done that all behind closed or in front of cameras and everything else. So I'm not really sure where things are going here with between Trump and Powell. I mean, like I said, at this point, it seems like they're just absolutely coming at the guy. So I really enjoy. It seems like we've gotten a lot of you guys here in the chat. The chat isn't very active. I think we got up to a max of 4 of you in here. So be sure to smoke the like with like Cheech and Chong. Hit the subscribe button with the bell notification so you guys know when I'm going live. And come out to more of the future ones. I want to see this chat get active. Tell me what you guys are thinking. Leave a comments below as to what you guys really think about what Powell and Trump being at odds. Do you think it's real? Do you think it's Fugazi? Yeah, I will catch you guys all tomorrow. So thanks for tuning in.